Every market crash destroys wealth, but for a few, it builds empires. The Great Depression, the dot-com bust, the 2008 meltdown, each one shattered economies, broke investors, and rewrote financial history. Yet, hidden beneath the chaos, every crash had a secret. The biggest fortunes are built during the darkest times. While millions panicked, a few saw opportunity. They understood that fear and greed are two sides of the same coin, and that markets always move in cycles. Now, as we stand on the edge of another historic turning point, all signs are pointing to a massive correction around 2026. The question isn't if it will happen, but who will be ready when it does. Right now, the global economy is showing the same warning signs that appeared before every major collapse in history. Record debt levels, inflated asset prices, geopolitical tension, and overconfident investors who believe the market can only go up. Sound familiar? It should, because this is exactly how it looked before 1929, before 2000, before 2008. Every time people said, "This time it's different," and every time they were wrong. In 1929, euphoria ruled the market. Stocks were rising, speculation was wild, and people were taking out loans to buy shares they couldn't afford. Then came the crash, a chain reaction that wiped out entire fortunes overnight. But a handful of investors, like Joseph Kennedy and others, saw the storm coming. They pulled out early, protected their wealth, and used the collapse to buy assets for pennies on the dollar. Within a decade, they had multiplied their fortunes. Fast forward to 2000, the internet was the new gold rush. Every company with a .com in its name was valued like the next big thing. Investors were drunk on optimism until the bubble burst. Billions vanished in weeks. Yet those who stayed calm, who invested in real innovation rather than hype, people who saw the potential in companies, like Amazon and Google, turned that crash into a foundation for generational wealth. Then came 2008. The housing market collapsed, banks failed, global panic took over. The world watched in fear as stock markets crashed 50%, real estate prices plummeted, and unemployment skyrocketed. But while most people were frozen in fear, a small group of investors made strategic moves. They bought undervalued properties, invested in distressed companies, and took advantage of record low prices. Within just a few years, they weren't just surviving, they were thriving. Now here we are again, 20 years later, standing at the edge of another financial storm. You can already feel the tremors. Central banks are out of ammunition. Interest rates have swung wildly from record lows to decade highs. Governments are drowning in debt. Corporate profits are slowing, inflation remains stubborn, and the middle class is being squeezed like never before. Every economic bubble eventually bursts, and this time the bubble isn't in just one sector. It's everywhere: stocks, real estate, even consumer credit. But here's the truth that most people miss. Market crashes don't destroy wealth, they transfer it. Money doesn't vanish, it moves from the unprepared to the prepared. The investors who panic, sell, and flee the market hand over their wealth to those who understand the cycle. Those who study history know that every downturn plants the seeds of the next boom. So how do you prepare? The first step is to understand where we are in the economic cycle. Markets move in patterns: expansion, peak, contraction, and recovery. Right now we're sitting near the top of the cycle. Prices are inflated, optimism is high, and everyone believes the good times will last forever. That's exactly when the cracks begin to form. Smart investors aren't chasing trends, they're watching the signals. They're reducing risky exposure, increasing cash reserves, and identifying undervalued opportunities that will explode once the market resets. They know that wealth isn't made when prices are high. It's made when prices are low and everyone else is afraid to buy. Think about it. Every major fortune of the last century was built during times of fear. Rockefeller expanded his empire during the Panic of 1873. Warren Buffett made his boldest moves during the 1970s stagflation and the 2008 crash. Elon Musk's companies survived and thrived through multiple recessions. Fear is temporary, value is forever. When the 2026 crash hits, and the data suggests it's not far away, the headlines will scream panic. Social media will explode with fear. Investors will dump stocks, real estate will plummet, and mainstream experts will say this is the end. But those who have prepared, those who have cash, courage, and a strategy, will quietly begin buying. They'll invest in strong companies with real assets, in technologies that will define the next decade, and in sectors that rebound fast after downturns. Let's look at what those opportunities might be. Historically, after every major correction, three sectors lead the recovery: technology, energy, and infrastructure. In the coming years, we'll likely see massive investment in artificial intelligence, clean energy, and digital infrastructure. While panic will dominate the headlines, long-term thinkers will see the setup of a lifetime. And it's not just about stocks. Real estate, commodities, even digital assets will go on sale. When prices drop 30%, 40%, even 60%, that's not a reason to fear. It's a signal to act. The goal isn't to predict the exact day of the crash. It's to position yourself so that when it happens, you're ready. Preparation means liquidity, keeping cash or low-risk assets ready to deploy. It means knowledge, understanding how markets move, how to value assets, and how to recognize real opportunity. And most importantly, it means patience, because the biggest returns come to those who wait while others panic. Remember this: the average investor loses money during crashes because they react emotionally. They buy high and sell low. But the intelligent investor, the one who studies history, stays calm and follows data, uses emotion as a signal. When fear peaks, opportunity is greatest. When greed takes over, risk is highest. Imagine this scenario: it's 2026, markets are falling fast, news anchors are panicking, investors are selling everything. But you've prepared. You have cash on the sidelines. You've researched the strongest companies, the best properties, the most undervalued sectors. While everyone else is running for the exits, you're walking in, buying assets that are 50% off. Fast forward 2 or 3 years, the market recovers, as it always does. Your portfolio doubles or triples in value. That's how wealth is built in silence during the chaos. History rewards the contrarian, it punishes the crowd. Every generation gets 1 or 2 major opportunities to transform their financial destiny. For the last generation, it was 2008. For this one, it could be 2026. The only difference between those who get rich and those who go broke is preparation. And preparation doesn't mean panic. It means perspective. It means understanding that cycles are natural, that every boom leads to a bust, and that every bust leads to a new boom. It means keeping your emotions in check, your strategy clear, and your focus on the long game. So ask yourself, what will you do when the crash comes? Will you panic like most people and sell everything at a loss? Or will you stay calm, stay informed, and seize the moment when prices fall? The choice will define your future. The world's greatest investors aren't lucky. They're disciplined. They understand human psychology better than anyone. They know that markets don't just move on numbers, they move on emotion. And that emotion, whether fear or greed, always swings too far. When fear dominates, everything is undervalued. That's when opportunities hide in plain sight, if you're willing to look. Maybe it's a promising company that's been unfairly punished. Maybe it's real estate in a booming city that suddenly becomes affordable. Maybe it's a new technology that's been ignored because the market's too scared to believe in it. These are the moments that separate ordinary investors from extraordinary ones. So as we approach 2026, start preparing now. Study economic history. Build cash reserves, reduce debt, diversify intelligently. Learn how to value businesses and assets for what they're truly worth, not what the market says they're worth today. Because when the market resets, those who understand value will see opportunities everywhere. And here's the most important thing to remember. Every crash feels like the end of the world while it's happening. In 1929, people thought capitalism had failed. In 2008, they said the financial system would never recover. Yet every time, the market not only recovered, it reached new heights. The same will happen again. It always does. So don't fear the next crash. Anticipate it. Embrace it. Prepare for it. Because while everyone else sees disaster, you'll see the greatest transfer of wealth in modern history. The next few years could change your life if you have the courage to think differently, to act strategically, and to move against the crowd. The 2026 market crash could destroy fortunes or create them. It all depends on what you do before it happens. History has written the script. Now it's your turn to decide your role. Will you be the victim of the next collapse or the architect of your own financial empire?